Okay. If anyone's in there, just getting in live now. Just want to see if for people to start hopping in and let me know if you can hear me okay. Hello, hello. It says comments will appear. I'm just waiting for people to hop on in. There we go. Sound is great. Perfect, perfect. I believe there was a person wanting to join in live. He's messaging me now. I'm going to reply to him. I am live now. There we go. Hello, hello. FB Live. Just replying to some people I want to join in. I'll wait a few minutes here. Looks like we got 4, 5, 6 people joining in. We got some people still working the office too, so if you hear some background noise, it's we're still going here. Tiffany, I don't know if you can reply to word of mouth. He did comment in there he wants to join in. It says that he needs a link, but I'm not quite sure. I should just be in there live in the group right now, so we'll just wait a little bit longer here. Hello, hello, Marissa. We'll just wait a little bit longer here. I'll wait a few minutes, just a few minutes past 7 o'clock. While I wait, though, we really would love everyone. Jeremy did add some links for our YouTube channel. We've made a YouTube CrediTV, so that way we can have everyone watch our videos, not only live, but just more of a archive history of our videos here. So if everyone could check out CrediTV here, YouTube. I'm just putting that on there right now so people can check that out. Not right now, but in the future, and I'll put that up again here a little bit later. Perfect. We have more people on. I'll just wait maybe one more minute before I start going into the content surrounding Credilife and our Student Loan Assist program. Okay, let's see. It says flip it. I don't know flip it in what way. Hello, hello. Hello, Rich. Hello, Renee. Says it's backwards. Backwards how? Hold on. There we go. I just flipped it a couple times. Is that working better? Let's just see here. It says, oh, your paper. No, I flipped it around. Did it flip back yet? Hello, hello. Oops, sorry. There we go. Tiffany, I don't know if you can hear me. Is it perfect? We got more people jumping in. There we go. A ton of people jumping in right now. The YouTube sign. Oh, the YouTube sign. That's right, because everything is backwards. You know, I won't be able to flip it. that's too funny. There we go. Yeah, I didn't even think about that when we printed it out. Was in reverse. Yeah, sorry about that. No, but if you could check out the channel in the Free Credit Repair Advice group, we did put a link on there to our YouTube channel, CrediTV. That way, you guys can check out all of our videos. We're gonna put out more videos every single week, just to continue to give you guys great education surrounding all sorts of stuff. You know, credit improvement strategies, student loan assist strategies, credit building strategies, all sorts of stuff. So. Chaz has a question here. Chaz is actually one of our student loan experts with the Credilife Credit Improvement Program. He's asking, how can someone stop a garnishment on a student loan? So there's actually a couple different ways you can do that. One, if you have federal loans and you have defaulted on federal student loans, one strategy is going into what's called rehabilitation. And so with rehabilitation, it's essentially a negotiation of a voluntary payment that works within your budget, but it's not so much just that. You know, you do have to fill out what's called a statement of financial status, which is a federal document that you then provide to show what your income is, what your expenses are, and it only has a list of allowable expenses, and what they're looking at is the difference between what's coming in and what's going out. You know, how much income, actual take home is happening, and what expenses. And of that's called discretionary income. and they would do a percentage of that discretionary income. So that would then be the voluntary payment. Voluntary payments can be as low as $5 a month, but if you're currently being garnished, what they then do is they go for 5 payments, so 5 monthly payments on time, and at that point they would then stop the garnishment. So if you are currently being garnished, I highly recommend going, and if you want to reach out to us for help, we can help you. If you just need, reach out to the service or a collection company on your own. What you're looking to accomplish is a rehabilitation and stopping the garnishment after you've made 5 voluntary payments on time. It's still a 10-month program, and you still need to make 9 voluntary payments on time in the 10 months, but to stop the garnishment, you need to make 5 of those payments. Another option, and this is more working with the county, is if it's causing undue hardship, financial hardship, there is a form that you can file with the county that would allow you to potentially stop the garnishment that way. Okay, that is a very it's a viable option for anyone that just they jumped to garnishment, you weren't prepared for it, you didn't know how to handle it, and you're looking for some options because the amount that they're taking from your check is causing significant financial hardship. So there's 2 options for stopping that. I'm going to look up here to look at some more questions here. Here we go. We got Vicky. Student loan showing 0 balance on my credit report. How can I dispute it? Okay, well, let me ask you this, Vicky. Is the student loan showing a 0 balance? Well, you said that, but was it a negative? Was it charged off? Was it default and it's now showing a negative or 0 balance? Because when it comes to your credit report, you don't always necessarily want to dispute everything to have it removed, because there is a part of your credit score that's based on length of credit history. And by potentially removing an account off a report, you can then shorten that length of credit history and potentially even lose out on positive payment histories that would have been in there as well. So it just depends. But to go through disputing, you would want to strategically challenge the accuracy or validity of what was once reported, and that's how you potentially get it removed off your credit report. I'm just going to move up here just a little bit here. So we got Crystal. If you do the rehab and your loan goes to another lender, is there a way to get the defaulted account deleted? It just depends. But once again, that comes from investigation. I know a lot of people in this group are looking for credit repair. They're looking to potentially remove information off their credit reports. When it comes to student loans, that's going to be a difficult task when it comes to the investigation process. It is possible to have that information removed off your credit report, but it really comes down to the strategies of the investigation or challenging of that information directly with the credit bureaus. Through the rehabilitation, though, they do remove default remarks from your credit report. Okay, so that's key, because if you can remove default remarks once you've successfully rehabilitated the loans, that is going to put your credit profile in a much better position when it comes to lending. Another thing to keep in mind if you have federal student loans and you're defaulted on those loans is there is a list called Caver's List. Okay, that is a list that if you're on it with a defaulted federal loan, you will not qualify for FHA financing. Okay, FHA financing is very popular right now in the mortgage industry. A lot of people, it's a lot of first-time home buyer type loans. If you're on that list, or if you have defaulted federal loans, you are not going to be approved for FHA financing. So even if the credit score is in pre-approval position, the credit profile, your credibility or lendability is not there because of that issue. So once again, you have to address it. Let me just see here. I just want to look here. Let's just see. Priscilla, why is it better to consolidate student loans? A friend I know said she tried to consolidate, but the interest rate would be higher. Okay, that's a great question. So, with federal student loans, there technically is no interest rate reduction. Okay, so when you do a consolidation, what they're doing is they're going off of something called weighted average, a weighted average interest rate. So they're going to take all the separate disbursements of your student loans, all the interest rates associated with those student loans. They then average out those interest rates for a new interest rate with the new consolidated loan. So there's going to be times where that interest rate might be a little bit higher than what you're seeing, because you might have disbursements with a lower interest rate, let's say 3.4, but yet you have multiple interest rates at, let's say, 6.8, and even some at like 7.4 and maybe in between. So they're going to take that weighted average, and what they literally do is they're going to add up. If, let's say you have 7 federal student loan disbursements, they're going to add up all the interest rates, divide that by 7. That is now your weighted average interest rate. So there are some times where that could cause a little bit of conflict of the total interest rate based on that weighted average. Here's a great one. Another one from Priscilla. Does consolidating affect your credit age history? Yes and no. It's not going to affect the length of credit history tied to the previous paid or closed student loans, but it will have a new account, which new credit is a portion, 10% of the FICO algorithms based on new credit. So therefore that would be a new account. But once again, check this out. A lot of people don't know this. FICO and the FICO algorithm, which is your credit score, has a part to it. It's called rank order risk. And what that means is the larger the dollar amount, the more important it is within your credit profile. So if you have a federal consolidated loan, let's say you had 7 loans once again, $3,000, $12,000, $9,000 and on, and now you have a consolidated loan of, let's say, $60,000. Well, the history now tied to that moving forward, the ranking of that is higher. So over time, building on that, the positive payment history is going to be a positive impact to your FICO credit scores. Let's see here. We got private student loans. All right, this is a good one. I'm glad someone brought this up. Private student loans are an issue just like federal student loans. I know tonight we're going to have a lot of questions surrounding federal student loans, but we do a lot with private student loans. Here are your options with private student loans. I'll lay them out. 1, there are a lot of banks that offer interest rate reduction refinancing. Now that you can do for both private and federal loans with a private bank. That's going to be based off the same type of standards as you would go and apply for a mortgage, let's say. It's going to be based on your income, so debt to income ratio is a big part of it, and credit score. Those are huge. If you have a good credit score and if you have a good income, let's say, so that way your debt to income ratio is lower, you are in a very good position to take advantage of the low interest rates available for private interest rate reduction refinancing. On average right now, I'll tell you, for a 10-year term, the interest rates range between 3.8 up to about, I'd say, 5.75, 6%. It really depends. And why there's such a variance there is it really is weighted on debt to income ratio. If you are pre-approved based on your credit score, debt to income ratio is going to be a huge factor for how much the interest rate is tied to that new loan. Another option, let's say you've defaulted on private student loans. Really what you need to go into is you need to go into negotiation. Very similar if you had a charged off account, collection account, you're going to want to enter into some debt management, debt negotiation, and negotiate some sort of settlement on that account, whether it be through voluntary payments or even a lump sum settlement where you pay a portion of the balance to have it satisfied as paid in full. Okay, so that's another option. Finally, with federal private student loans, there are options like with Sallie Mae, Student Loan Finance Corporation. There are some servicers out there that do offer similar programs like federal repayment plans, but are still technically private. Navion does as well, where you can go into income-driven plans as well, even though it's not a federal income-driven repayment plan. So there's some great options around private. I'd highly recommend, if you have private student loans and need help with it, reach out to us. I know Tiffany and everyone's going to be putting on our links to talk with our team here. I would highly recommend doing that if you have private loans, or really anyone with any loans, but private's something that's completely different. Let's see here. I got to look up a little bit to find another question. We got Prin. So I was told that my debt to income ratio was too high to get a home because of my student loans. What do I do? That is a huge one. I'll tell you right now. So what's happening in the mortgage industry surrounding student loans and the qualifying, the underwriting guidelines around or surrounding student loans for a mortgage is a lot of people, let's say you have income-driven repayment plans. Income-based repayment's a popular one. Pay-as-you-earn's a popular one. You have standard repayment, which is 10 years. You have conventional repayment options like extended fixed or extended graduated. So a lot of times what we need to look at is, one, who is the lender or bank that you're working with? and what type of loan are you applying for. Is it FHA? Is it conventional? Is it VA? And then based on that, we're going to have more information knowing how to restructure your loans in a way to put you in the best position for that loan when it comes to debt to income ratio. So for instance, what I mean is this. Right now with FHA financing, what the underwriter is going to do is if you're, let's say you're in a forbearance, so you're paying, $0 a month because you're in forbearance. Or let's say you're in any of the 5 income-driven repayment plans, and let's say you have a $60,000 loan, but your monthly payment's $50 a month. Well, $50 a month doesn't amortize, it doesn't pay off that loan in 10, 20, 25 years, okay? So I did, Jeremy, already. I'll bring it up again. CrediTV, everyone, make sure to subscribe. But what I'm saying is, when an underwriter sees that, they know if you're paying $50 a month, you're not going to pay off that loan in 20, 25 years. So they're not going to accept that payment towards the debt-to-income ratio when qualifying for the mortgage. What they're going to do is take 1% of the loan balance, and they're going to then qualify that towards your debt-to-income ratio. That can be huge. So if you're at $60,000, that's $600 a month. So what we would then do there is we'd look into options like extended graduated. Extended graduated is a good option because it's a 20 or 25 year term loan, and it starts out with lower payments. And every 2 years, that minimum monthly payment increases, but it does amortize at the end of the term, meaning you will pay it off at the end of 20 or 25 year term. Okay, so then, but at the same time, the monthly payment is less, and now we've put your credit profile in a better position for that mortgage. And afterwards, we can definitely change it. You can then go back into an income-driven repayment plan if that makes sense. But at least when it came to the mortgage, we put you in a better position to be approved for that mortgage. So hopefully I explained that where people understand. Let's see here. We got Jamie. My income-driven payment plan is $0 a month right now. What can I do to combat the interest? It can't be good to not be paying anything. Is there more than one loan forgiveness program? Let's see, I can't see that. Let's see. More than one loan forgiveness program, or just the one where you work full time for 10 years and make a set payment the whole time? I'm a stay-at-home mom. I work twice a month. I could never work full time. 7 children. Okay, so yeah. Here's what you want to think about with income-driven repayment plans, okay? All income-driven repayment plans for federal student loans qualify for debt forgiveness eligibility. This is important to know because what you're saying there is saying, hey, I know my payments right now are $0 a month, but I still have interest accruing. What should I be doing about that? Well, in my humble opinion, my professional opinion, is nothing. Nothing. That's the whole point of the program. Right? So if you're in that planning, what you said is, I'm a stay-at-home mom, I don't see myself working full-time, I have 7 kids. Well, if that's the case, what you're going to want to do is position yourself to take advantage of this debt forgiveness, because every year that you then file your taxes and you update the servicer on your tax filing, your gross income for the previous year, your payments for the next year are just based on that. Well, if your taxable income is low because you're a stay-at-home mom, well, your payments technically will always be low, $0 or low. So then at the end of the term, all additional principal and accrued interest is then completely forgiven. That is so important. So I would say in that situation, I would advise, and obviously I don't know your complete situation, but I'm just giving you some advice here. I would take advantage of that fully and not pay anything towards interest. Now, where that can change is this. If you are in a situation, you're married and your husband or wife or your spouse makes a very good income, and you then file taxes married and jointly, well, your payments will be based on household income. That includes the way that you're filing taxes. So if you, as a household, even though let's say you're a stay-at-home mom and you don't make any income, but your husband does, and let's say he makes $100,000 a year, well, now it might not make sense to be in that plan because the monthly payment itself is much higher, and it might make sense to look into interest rate reduction refinancing to take advantage of a lower payment or lower interest, or going into an extended plan, more of a conventional repayment plan, and then making additional payments to pay off the debt quicker. So these are the type of things that you want to think about. You want to understand the different options surrounding student loan repayment, but not just in the now. You want to understand, hey, what do I have to do about my position now, to better my financial position, to better my credit profile? But you have to think about the future, okay? What am I striving for? What type of things are happening here in the future? Well, if you know in the next year, 2, 3 years that you're going to be making more income, well, then we might want to put together a plan that incorporates that, knowing, hey, let's go into an IDR plan now, or income-driven repayment plan now, but we know in 3 years we're going to change that and work on putting your credit in the best position to then be approved for a private interest rate reduction refinance, take advantage of a lower interest rate, and then pay it off that way. So that's my recommendation. Let's see here. So Priscilla, so you're suggesting that it's better to be under the extended graduated program when trying to qualify for a mortgage loan and then change it to an income driven. Most cases, yes. So I don't want to say yes without knowing your entire situation, but in most cases, yes. I've helped hundreds of people in that same situation where once, first, like I said, let's talk to the loan officer. Let's talk to the mortgage professional, know exactly what underwriting guidelines they're working within. Is it a conventional loan? Is it an FHA loan? But if it is an FHA and they're basing off the 1%, well, let's take advantage of an extended graduated, because 9 times out of 10, the monthly payment on an extended graduated is going to be significantly less than the 1%. So yeah, in that case, I'd say take advantage of that. Let's see here. Let me just go back up. Oh, hello, Brian. Brian Kurzweil and Brian Del Terzo and Kaylee Del Terzo. Hello, hello. Oh, Katie, my girlfriend's on. Hello, hello. I'll see you later. Kimberly. So let's get this one. How fast is the public service loan forgiveness process? I've been working in the field since the beginning of the program and should have a great deal of qualifying payments. I have $70,000 in loans. Attempting to purchase a home within 12 months. Awesome. Okay, so knowing that you're currently in the public service loan forgiveness plan, you're going to want to stay in that, okay? The reason being is exactly what you said. You've already made a substantial amount of qualified payments towards that. Now, for everyone that's wondering what that means, this is for any income-driven repayment option with debt forgiveness eligibility. 10 years is for public service loan forgiveness. 20 years is for pay-as-you-earn. 25 years for income-based and income contingent, okay? Now, for her, in this case, she's getting the 10 years public service loan forgiveness. So she needs to make 120 qualified payments under an IDR plan to then qualify for that forgiveness. Here's 2 things I'd recommend. 1, stay on top of recertifying your income each year with your servicer. That's a big one. Here's another big one. A lot of people may have seen this on the group and on the news through articles. But there are some articles surrounding, I believe it was Fed Loan, where people who thought they were in public service loan forgiveness and reached the 10-year mark and they did not have the forgiveness. What that is this. On top of recertifying your income each year, there is a form, it's more of a voluntary form, that recertifies you towards the program, the eligibility of the program. You're not going to be, let's say, taken out of the program, but what it is, it recertifies you into the program and makes sure you're in the right program. And what I mean by that is that let's say you had multiple disbursements. Of those disbursements, they have different dates, they have different types of loans, so subsidized, unsubsidized, Parent Plus loans, all sorts of stuff, okay? Not all disbursements qualify for all different income-driven repayment plans. So what happens is you may have been put into a pay-as-you-earn plan, public service loan forgiveness. Perfect. I'm in there. I'm rocking. $0 a month payment, or let's say it's $100 a month, whatever it is. Well, there are times where certain disbursements in there did not qualify for pay-as-you-earn, and therefore it's a different plan. And that's where there could be some potential conflicts. So what you want to do is you want to make sure that if you are in the public service loan forgiveness or any of the income-driven repayment plans where you know you're going to qualify for debt forgiveness eligibility, you need to make sure that you're in the right plan that all your disbursements qualify for on top of public service loan forgiveness, okay? Hopefully that makes sense for you guys. You just want to make sure you're being proactive and working with your servicers in a way that you know you're in the plan, you're making qualified payments. Another thing to keep in mind is that if you have ever been in any income-driven repayment plan, as long as it stays with that servicer, so let's say Fed Loan, Great Lakes, all those payments do qualify for the forgiveness. Where you can lose that is if you consolidate the loan or if you go to a new servicer, okay? So you want to make sure that if you are taking advantage of any of those programs, you do it in a way where you're informed and you don't do anything that can mess that up. Another thing I want to jump on that is I know that you said you want to be approved for a mortgage in the next 12 months. You know, honestly, a lot can change in 12 months surrounding underwriting guidelines. But for right now, keep that in the back of your mind, knowing that if 1% of your loan balance, I think you said $70,000, so $700 a month, you want to keep that in the back of your mind, knowing that you should probably start making sure that the information within your credit report, you're managing it in a way to have very low ratios on your credit cards to minimize minimum monthly payments, to make sure you keep the debt to income ratios as low as possible, because you're about to have a $700 potential debt to income going towards that, even though you are in the IDR plan. So just keep that in mind. Once again, I don't know your full situation, but I just want to make sure that you're aware of that so you can plan. Let's see here. We got word of mouth. Oh, hey, you're on. Awesome, man. So, hey, with student loans, to get student loans off your credit, if I showed a different amount than what you signed for, because I signed for $15,000 and they put $20,000 on my credit because I didn't get the $5,000 grant. You know, I would need to know more information on that. I think what you're saying is that you had applied for student loans and you also were eligible for a grant, and you did not receive that grant, but you only received $15,000, but when you pulled your credit report, it looks like there was $20,000. I would highly recommend reaching out to Department of Education or your servicer directly and getting that corrected. Here's what happens. You have something called National Student Loan Database, okay? And of that, it's a history of your federal student loans, your disbursements. There have been times, I'm not trying to spook people, but there have been times where the information within the National Student Loan Database is not accurate, okay? And so you have to make sure you stay on top of this, because if there's an issue like that, correct it. National Student Loan Database, you can reach out to them. Department of Education, you can reach out to them. Reach out to your servicer, okay? You have to stay on top of this, okay? I see a bunch of wows, and this is very true. We've had multiple clients come in who have had to dispute, and this isn't through the credit bureaus, they had to dispute the validity of the debts and what's actually reporting, because what they received, what was dispersed to them compared to what showed up on the system was not right, which means they had to pull the whole history with their schooling, because a lot of times what happens is the schooling then receives those funds, they get paid. If you get paid any additional money for, let's say, living expenses at whatever, you then receive that. Well, once again, there have been times where that information has been incorrect, what you actually received or what the school even received. So keep that in mind. Let's see here. How do you enter into the Public Service Loan Forgiveness Program? Okay, that's a great question. So here's what you do. Most servicers right now have done a phenomenal job making their platforms, their online portals, user-friendly. I know not everyone is tech savvy, so sometimes it's not user-friendly to everyone, but they've done a really good job of trying to extend the olive branch, so to speak, to help people navigate through these options. So with Public Service Loan Forgiveness, there's a lot of ways that, like Fed Loan, you can actually apply right through the website. And if your employer is already listed within the information, you can put all your information in there, where you work, how long you've worked there for, all the information. It then automatically generates for them to almost do a verification of employment, so to speak, to make sure that you are working there, and now it all gets done electronically that way. There is a form as well, so if you are applying for federal student loan forgiveness, public service loan forgiveness, I should say, there is a form that you can get through Department of Education or Federal Student Aid to allow you to apply that way. And you can do that through FSA ID, electronically, or manually by printing the form and then mailing it into your servicer. If you have any questions on that or need help with that, this is why we're here. You know, we're here to help you guys. I understand that, to me, I do this every single day. It seems easy to me, but I also understand on your side, it's confusing. You know, when you have multiple disbursements, maybe even multiple servicers, you have federal loans, you have private loans. Hey, should I do this? Should I do that? That right there is the value and why you should be reaching out to someone, like myself or our team here with the Credilife Student Loan Assist Program to help you navigate through that. And once again, consultations, there's no charge for an initial consultation to at least go through and figure out what should be done. And if it makes sense to retain our services, perfect. Let's help you out. If it doesn't and something you can do on your own, perfect. Regardless, we want to be here for you to help you and make sure you get on the right path here. We really want people to not only improve their credit, but we believe in helping people improve their credit and financial stability. That's key for us. Let's see here. I want it off my credit. It's showing that I have 2 accounts. So word of mouth, once again. So in that respect, if there's an inaccuracy, once again, I would highly recommend reaching out to the student loan servicer on that inaccuracy. But at the same time, I would go through an investigation process directly with the credit bureaus and challenging the validity and accuracy of that information. Now, knowing that from what you're saying, it's not valid information or it's not accurate, there is a chance that the bureaus themselves may update that, or the creditor that they then reach out to through dispute, and they might correct that and have it then report accurately, or there definitely is a probability that they may then just remove that completely off your credit report. However, keep this in mind. If you're looking to improve your credit profile and your credit scores over time, if you have student loans, especially if they're federal, you got to pay them. You're going to have to pay them back. So you might as well figure out a way to then work on those student loans and go into a proper repayment that works best for your budget and what options are available, and start building that positive payment history, as well as tackling that inaccuracy of reporting and get all that corrected. Let's see. Michelle, I have a student loan account that is reporting in good standing status and a negative status. Do I contact the bureau or Navion? So let's just see here. Oh, Jeremy wants me to recommend to everyone to check out on our YouTube channel. We're very excited about this. We have CrediTV. So everything we're doing here, what I'm doing tonight, all sorts of stuff. We got Chris, we have Rick Wenner, we have Jeremy, we have Chaz. We have a great team here. We're going to be doing a ton of videos for you guys. And very soon we're going to be doing this through YouTube. Now, if we get 100 subscribers or more, we can actually broadcast YouTube directly through Facebook as well. We can do both simultaneously, so we can continue to give you guys this content, but also reach more people. So we'd really, really appreciate if you guys go to the site, CrediTV. We have multiple links in Free Credit Repair Advice where you guys can just click it and subscribe. We'd really, really appreciate that. We want to build up that subscriber base so we can have the opportunity to do that. Let's see here. See if we have more questions. This has been fun, guys. I love doing this stuff with you. Let's see. I think I got all the questions. Let's see where we're at. We're at 7:36 p.m. Let's see. Just want to take a look at this here. Okay. I want to go through an overview real quick since there's no more questions right now, and I'll touch on more questions as they come. But what I want to go over is just a general overview of all your different options, okay? So when you have federal student loans, in most cases, people are interested in what's called consolidation. So federal student loan consolidation. That's consolidating all the student loans, all the separate disbursements into one new loan with one servicer. The benefits of doing that is one, it's one loan, one servicer. That's huge. Oh, sorry, let me take a step back. Michelle Scott says I missed hers. Let me just look real quick. I will find it. Oh, here we go. Hi, my income-driven plan has been paying $500 a month. I work full-time. The $500 is a quarter of my income each month. My husband has student loans also, $600 a month, a quarter of his income. So $1,100 a month between the two of us. Would it be wise to look in consolidating all of our loans together for a lower expense every month? Yes. So what you need to do there is you can't really consolidate all the loans into one and just have one new loan, but two options here. And I'd love to help you guys with this because this does require a little bit more navigation on your options, but there's two viable options. One, when you apply for an income-driven repayment plan, they now have it where it includes the spouse's federal student loan debt as well. That does now impact the monthly payment for yours. Before, it did not. So when you went through when you went through the process before, a lot of times that wasn't on there or that was missed. That's now a part of the application. It does play a role in the monthly payment. So what we should do is go through, what we have here is a repayment calculator that we use, a tool, to go through and say, okay, what's the amount of federal student loan debt for you, for your spouse, and then running through the calculations of adding on those debts together, at least just calculating them to the discretionary income is what it's called, and then seeing how that impacts the monthly payment. Another option that you can do is through income contingent repayment. You can actually bring those loans together. I'm not quite sure on how it reports, but you can actually combine them at least for the monthly payment, and that then has just one payment for income contingent for both, husband and wife, or spouse, I should say. So would love to help you with that. Please reach out to us. It's much easier to go through that with you over the phone and the calculations, so you actually know the numbers. What does that mean? How does that look? What's the bottom line? And actually going through that. So let's see. I know someone said I missed Emily, so I'm going to find Emily here real quick. I will find it, Emily. One moment. It's hard when I'm on my little phone here. Emily. Emily, perfect. Okay. I work for the state of Maryland, medical field that does that make me qualify for the forgiveness plan? Yes, I believe so. If you're working, a lot of times any city government companies, any nonprofits, anything that qualifies for public service, a lot of times, yes, working for the state of Maryland, that's a government agency job, a lot of times, yes, you're going to qualify. So I would highly recommend applying for that. I cannot say for certainty, but I would have to say 98% chance that you qualify. So yes, I would definitely take advantage of that. Do you guys handle private student loans? Jackie, yes. We were just talking about that a little bit ago. Yes. With private student loans, it just depends on what you're looking to accomplish. But right now with private student loans, we work with a lot of different banks nationwide that allow for interest rate reduction refinancing. That's huge. Or you just want to consolidate your private student loans into one new loan and maybe just extend the term out for a lower payment. That's an option too. You can actually do that for both private and federal loans. So dependent on your credit score and your income situation, it might be something that we look into. Kimberly, would the graduated repayment plan be a good plan to enter into once the public service loan process of Fed loan becoming my servicer is done? Currently, an IDR payment $700 a month. Or would changing repayment plan, sorry, I'm trying to click that. Getting all messed up here, sorry. Let me click this. IDR $700 a month, or would changing repayment plan mess up forgiveness? That's a good question. So if you're changing the plan, technically, as long as it stays with the same servicer, we should reach out to the servicer to verify, but it should not, there's still qualified payments, okay? So as long as you stay with that servicer, the qualified payments have been made. So if we have to make a switch, I would say that in this situation, we want to reach out to the servicer to make sure we're not messing up anything, to confirm that. But if we're doing this for the purposes of being approved for a mortgage or putting ourselves in the best position for a mortgage, it's worth the phone call, it's worth the research, okay? Let's figure out if we switch that over, because ideally or ultimately what we're looking for is just changing the monthly payment reporting, that it's accepted by the underwriter for debt to income ratio, okay? And as soon as that's been accomplished, switch you right back into it. So I'd say let's reach out to your servicer and figure that out. Let's see here. We got Aubrey. So Aubrey says, my student loans were through Great Lakes, but I paid them off completely this year. Awesome. But I have Navion trying to collect the total amount of my student loans again. How is this possible? Let's just see here. What is my next move in getting Navion off me and credit report for debt that I already paid? This is something that I was just talking about a little bit. The National Student Loan Database only lists the loans from Great Lakes. Okay, so two things that could be happening there. One, it could be what I was talking about before, where you have your National Student Loan Database, you have your history of loans. You obviously should have all your history with Great Lakes and your payments and paying off those loans. We need to source those loans and make sure that, because remember, Navion does federal student loans, but they also service private student loans. So I'm not saying you have private student loans as well, but it's not uncommon that some people don't fully realize what's out there. In your situation, I'm not saying that's what it is, but if there was an issue that they obtained your information, it's very similar. Like servicers They're just servicing the debts, okay? And so what you have to remember there is they may have obtained multiple debts from Great Lakes in this situation and now have taken over the servicing of that. So they're going to assume the information, the paper that they have is valid, and they're going to collect on it. Well, if there was some sort of discrepancy there, what we have to do, one, is reach out to Great Lakes. Let's get a full accounting history of your payments showing that it's been paid. Then we need to reach out to Student Loan Database, match that up with the Student Loan Database. Then we have to present that information over to Navion and say there's a huge discrepancy here. What do we do moving forward? Because I've already paid this. That's exactly what we want to do. Renee says, hello. Hey, sorry, Renee. Let me just see. I'm assuming you must have asked a question that I missed. So let me see here. 1 second. I got to scroll up a little bit more. Sorry, one moment here. I'm trying to find it. Must have been way up there. Renee. Nope, that's Michelle. I'm sorry, guys. One moment here. Hey, Renee, if you don't mind, I don't know, I'm not seeing it here. Could someone, find her question and repost it? Or Renee, could you please repost it? I promise I will get to that. Jared, if you could steal a smooch from any Hollywood celebrity, who would it be? Oh man, I have no idea. I don't know. I'm good with Katie's smooches. I'm all good here, so I don't need any smooches from celebrities here. Good question though. But Renee, please, if you could repost your question, or if someone saw her question, if you could copy and paste that, I want to make sure I get that answered for her. She says yes, perfect. She's going to be doing that. So we'll just wait for that here. But
Jeremy says you went offline.
I went offline?
Yeah.
I see here. CrediTV, he's saying it. I don't know.
Okay.
CrediTV, everyone, go to CrediTV. Hopefully I'm still online. People are saying that I'm off. Help had my loans consolidated with student loan education services, and now they're trying to find new service for me. What do I do? Just keep in mind, Chanel, that there are times where a servicer is they're servicing a loan. So there are going to be times where they can transfer servicers. That's not something that can be stopped. The only way we'd stop that is if we did a consolidation and choose a different servicer and then work with that servicer. It's not necessarily negative. It's definitely going to be an inconvenience of having a new servicer, setting up new payments and all that. But it's not necessarily a negative. Let's see. She has more questions here. Oh, nope. This is Dominique now. My student loans are in default. Oh, yes. So if you're in default, we definitely need to help you with that. Okay, so a default, we need to enter into a rehabilitation to get you out of default, or there are times where you can be approved for an income-based repayment consolidation, and that can also get you out of default. So we have to look into the eligibility of both those things, especially knowing if you're a teacher, because you then qualify for teacher loan forgiveness and public service loan forgiveness, okay? But in order to take advantage of that program, you have to be out of default. So I'd highly, highly recommend, please reach out to us. Tiffany, everyone's been putting out information on there, so that way we can help you with that. And then Renee, Sophia, sorry guys, I'm on a small phone here. Renee said, never mind, I'm so sorry. If anyone has questions, Renee, let's see, I think Sophia Barnes, she posted it 3 times. I'm sorry guys if I'm missing this somehow. Let's see here. I will find it. Let's look. Sophia Barnes, number 3. Oh, number 3. It must be all the way up here real quick. How do I get rid of late payments on closed paid off account? Okay, so yeah, that's more of a credit repair question, but I can definitely answer that. So if you're looking, and remember, you don't always want to focus on removal information on your credit report, because a lot of times if you go through an investigation or dispute process, there are times where if you're successful with that, they may remove that information off your report completely, even though you might be challenging the late payments themselves. Okay, so keep that in mind. Now, I'm not saying not to do it. You have to be specific in how you're investigating these accounts. There's something called dispute codes, okay? anytime that you're going through the investigation process, the dispute process, ultimately that information is going to be assigned a specific code to that, a code of dispute. That then gets sent over to the creditor in question. They then reply to that specific code, okay? You don't want that to be a code that, if you're successful in that, ultimately results in a deletion. I'm not saying you don't want them deleted, but there are times where you may be losing out on positive payment history or length of credit history, and that deletion actually cause a negative impact than positive, thinking you're trying to repay, fix those late payments. However, there are definitely ways to challenge those accounts strategically, to focus in on the payment history specifically, and potentially repair that. So it is through investigation, it is through disputing, but it's not a simple process, okay? Let's see. Dominique, yeah, please click our link. Tiffany's posted it. Schedule a consultation with me or anyone on my team. We'd love to help you with that. Let's see here. So we got more. How to pay out interest without making $500 payments. How to outpay interest without making $500 payments. So I'm thinking here, you're trying to figure out ways to pay off interest more quickly. If that's your question, what you'd want to do is look into making escalated payments, really working out a debt reduction plan within your budget to pay off that debt more quickly, or pay off that loan more quickly, to then bring down that principal balance quicker, which then means you pay less interest. Hopefully that's what you're asking for. Let's see here. I got to look at this. How do you know when the student loan forgiveness companies are legit? So if you're talking about the servicers are legit. Fed Loan, Great Lakes, Navion. You might be talking about are these companies out there that just essentially buy large data lists and call you and text you and email you and market towards you because you're on a list. You know, that I'm not saying not to work with those companies. It's very difficult to work through and source if a company is credible or not, okay? What I'd recommend is do your due diligence and talk to them. We're a company like that, but we don't purchase data lists. We're here to help people. We do videos, we do affiliate marketing, where we do seminars, we work for schools, all sorts of stuff. But you want to make sure that the person is knowledgeable. They're not just selling you, they're not pitching you a product. They're actually working with you and presenting a solution to your problem. I think that's a huge difference in finding out if a company's legit or not. Let's see here. We're getting close to the end of this, so if anyone that I missed, I apologize. You guys can definitely reach out to us and schedule a consultation. There's no risk, there's no charge to a consult specifically to at least go through your situation in detail. So let's see here. Mine are both through Fed Loan, says Lindsay. I want to see what her original question was real quick. What if I have been going through some medical issues? Okay, so yes. A few things. If you're going through some financial issues, if you're going through some medical issues, I would first take advantage of forbearance. Okay, there are financial hardship forbearance or hardship deferments. There are general forbearance requests. I would highly recommend first taking advantage of that to stop the payments, so that way you don't go in a situation where you become late or delinquent on your payments and having a negative impact to your credit score. And then at that point, if you're having medical issues and that's impacted you financially, you can immediately look into an income-driven repayment plan. And yeah, they're going to go off of last year's income, but you can actually opt in and choose that, where it'll say, has your income dramatically changed from last year to what it is now? Well, the answer is yes, it has, because I'm going through medical issues and I'm not making the same I was, or maybe you're not working at all. So then you'd want to get that adjusted where you potentially could make $0 a month payments and you're no longer in forbearance and you're still in repayment. So that's what I would recommend, highly recommend. Now, if you get into a position where you're no longer able to work because of the medical issue, well, then I would once again go into an income-driven repayment option, because that then, once again, it's based on income. You can take advantage of debt forgiveness eligibility because of that. In a way, it all goes hand in hand because it's affecting you financially. That's what I would be doing in that situation. Once again, we could help you with that. Please reach out. My friend has Sallie Mae loans that have been moved to Navion but has late payments recorded. Can these be completely removed? So yes, that's through the investigation process. You want to make sure that I don't want to pass this off as if it's an easy thing. I think what happens in this group, I've seen it a lot. People are saying, hey, how do I remove this? How do I remove that? Just know the investigation and repair and removal process is not an easy process. It's not, hey, delete this. I don't like it on my report. It's not like that, because technically, if it happened within the history of lent money, it happened. What you need to understand is that it's all based on legality. It's all based on strategy. You want to go through and investigate the validity and accuracy of reporting information of what happened in the past, and have them go through that information and verify it as of today. That's the key. And you want to do it in a way that puts the onus on the creditor and the bureaus. That's what you want to do. So I'm not trying to answer your question vaguely, but it's not as simple as saying, hey, I don't like this on my report, delete it. Or it's not so much saying, hey, I dispute the late payments on this account, delete it. We have to make sure that we go through the process strategically and hone in on certain aspects of the account that puts us in the best position that they're unable to validate or verify, and that's what then results in the deletion or repair. So, guys, I have about 3 more minutes here, so I will be doing this again. So I apologize if I didn't get everyone's questions, but let's just see here. And then, yes, Jeremy said you can ask in the group. Of course, get everyone, ask in the group. You can watch us again. You can reach out to us. We're here to help. This is just a one-time. This is a one-time video today, but it's not a one-time deal. I'll be doing a lot of these. So, do we deal with these student loan issues separately with Credilife or with the account we have right now? I just started, so other things have been front and center so far. So, Jamie, if you're a client of ours, definitely reach out to us. We can definitely help you with that. Chaz works closely with me and helps our clients with student loans. I help our clients with student loans. We can definitely take advantage of the consultation, at least navigate and see what your options are. And if you are in the program already, on the Credilife Credit Improvement Program, we can then put that together and make sure that both coincide with what your goals are. So, yes, everyone, please go to CrediTV. Jeremy, the reason I'm not bringing up the paper is because it shows up backwards when I bring it up, okay? But yes, please go to the group, go to YouTube, CrediTV. All this type of stuff is going to be out there, so you guys can go back to it and you guys can watch it and just take in what was said here. Ask questions in the group, take advantage of our link and schedule a consultation. But please, schedule the consultation if you're seriously interested in fixing your situation, okay? We're very busy here. I'm not trying to say this in a negative way. We're helping a ton of people, so we want to make sure we specialize in working with motivated people, individuals that are really trying to address their situation. And with that, we love to help you, want to take time with you, and then go through that consultation. So, word of mouth says, when will you do how to repair your credit video live? Yeah, we've actually had, we've done videos already. If you do a search in there, we're going to be doing more. Next week we'll have a video. We're trying to do videos weekly. So please continue to pay attention to the group. Watch these videos. We're going to have a calendar on there soon that you can actually see, forecast out what videos are coming so you can make sure. Jeremy says, last question. What does the fox say? What does the fox say? It says, yip, 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 yip. So, all right, guys. Who do I email next? Dominique, please go to our link again. Or actually, you know what? Tiffany, if you don't mind, I will message you my link right now, real quick here. For anyone that has, student loan specific, like Dominique here, that want to talk to Chaz and I, I'll have Tiffany put up my link real quick, so that way you can get in touch with us. So I just put that in there. But yeah, thank you guys so much for your time. I really, really appreciate it. I hope that you found this video very helpful. We're here to help you guys. Our vision with the Credilife Credit Improvement Program and the Student Loan Assist Program is to help people improve their credit and financial stability. With that comes credit repair, credit education, budgeting, debt reduction strategies, debt management strategies like student loans. Student loans are a big one, so I'm glad that we were able to do this video and at least get you guys more information on your options surrounding student loans and understanding that there are a lot of options, but it's understanding your specific situation and what needs to be done to help you guys get past that so you can keep moving forward in your path and getting on track. So thank you guys again. Make sure YouTube, Credit TV, check it out. We need 100 subscribers or more so we can broadcast this whole thing live and go nationwide, baby. All right, guys. Thank you. Have a good night.